Recently, I listened to Blackstone's investment outlook and future investment strategy. As boring as that sounds, they came up with a really good philosophy and perspective of what industries will be disrupted by AI. And I want to try and bring it back to the real estate industry. So take a listen. Tell me what you think. Welcome to Rethink Real Estate. My name is Ben Brady, and this is a real estate podcast aimed to deliver sales strategies, marketing tips, and business insights from industry experts and myself to build a listing-focused business for the future. Let's get into it. Disruption seems to be something that is spoken about so often nowadays, in the sense that AI continues to be this conversation starter. What is it going to do? How are things going to happen if you had kids? What exactly, should they do? So on and so forth. I was listening the other day to Blackstone's release of what their forecast is for the remainder of this year, next year, and what their future outlook is from an investment perspective. I believe it's a summit that they put on for some of their major investors. Keep in mind that Blackstone is the largest fund in the world, or with the largest amount of assets under management in the world. And they go across so many different sectors. And I thought it was really interesting to listen to what they thought was going to be ultimately disrupted and how they were investing for the AI for the future. Because I wanted to sort of draw it back to the real estate industry. What are the avenues that will be disrupted by what their process is? And what I mean by that is that they use the analogy of picks and shovels. So they showed a video of the San Francisco gold rush, of somebody getting there and being like, "Hey, look, here we are. Let's go get the gold." When ultimately the people that made all the money were the ones who sold the picks and shovels. I think I've made that point previously. I stole it off Scott Galloway. They brought it up in their presentation as well. However, the one thing that I do want to make mention in the AI side of the business, first and foremost, this is something that I've heard a few people say, and it really resonates with me, is that one of the largest technology advancements that we have had in our lifetime so far, or excuse me, in the last 100 years, has been the invention of the airplane. If you think about it, Callistra and I earlier this year were in the south of France. It only took us, 11 hours from LAX, so on and so forth, right? Amazing to understand as well, like you can go from one side of the country to another within a 5-hour window. And all in all, though, if you think about it, that is one of the greatest advancements in our lifestyle, hands down. Arguably, if you don't travel much, then maybe you don't agree with it. But realistically, considering you had to get on a a boat to cross the Atlantic, or a train in order to cross the country that took forever, and so on and so forth. But the one thing that I would say about the airline industry is that it is one of the most unprofitable industries out there. It constantly has to be bailed out. It's ultimately it's life changing and it's world changing, but in essence, it relatively hasn't become the greatest profit center ever. Whereas if you think about like the e-commerce side of things, like an Amazon or different sectors where, they have been an incredible advancement things, and wow, do they make money hand over fist. That is not the same with the airline companies. And a lot of people have been comparing AI to this. They do believe that it's going to go the way of that. This could be the largest revolution that we have ever seen in the sense of the industrial age. But since it's the next industrial age or industrial revolution, so to speak, is AI. But realistically, though, is that the major AI infrastructure companies may not get to a point of major profitability. It's more so the picks and shovels, being the data centers, being the energy, being all of those different things. But when you break it down, though, to more simplistic sides of stuff, is that what is it going to disrupt? Okay. For example, the train companies or the railway companies massively disrupted at the thought of commercial aircraft. What are the massive disruptions that will happen in the industry side of things? And when Blackstone broke it down in their investment presentation, it made me really think about the real estate industry. So let me give you what they were thinking and what they were saying through their investment presentation. They had really a few different avenues that they were investing in and they were majorly talking about chips, data, and energy. That's where they were going to focus. But then they also have a fund, right? They have a massive fund that they go and buy individual businesses within industries where they think that there is a chance for disruption. So, give an example: rules-based businesses. So they gave the examples of accounting softwares. They gave examples of they get health claims, insurance claim business, where there are rules. So let me go back and just make sure that I get that point across. Rule-based industries, rule-based businesses is what they're going in, and they're acquiring a great deal of them at the moment in order to try and adapt them from an AI perspective. Because if you think about it, if you know the tax code as well as you ultimately need to, you go to an accountant and they know the tax code as well as they need to in order to go, these are the circumstances, here it all is. The rules are pretty black and white. Don't get me wrong. There is a level of creativity that they go through. There's a level of individuality, but you can give all of that to the AI and you can give it further prompts and more prompts and more prompts as it goes through. It's a very rules-based business. Think about an insurance claim. Typically, a large insurer doesn't take into consideration whether you're a good person or you're not a good person or how long you've been with the company or anything along those lines. I don't believe that it goes into any effect whatsoever. I don't really understand it. I'm pretty sure that there's just a book of rules and everyone has to go through them. That is a prime example of what ultimately could be disrupted. I've always said commercial real estate. It's either worth that or it's not worth that based on a price per square foot. It's pretty straightforward. Income, no income. There's no emotional tribe to it. There's no added advantage to certain different things. It is pretty blunt when it comes to a rule-based business. Now, there's probably a million examples that I'm not even thinking about, but I want to talk more about what are the businesses surrounding the real estate transaction that I think, based on this theory, could be disrupted. It's just something to really think about. I don't know that it's going to change anything for us. The good news in all of this is that I don't think it will change anything for us, because at the end of the day, real estate is not a rule-based business. As much as so many agents try to make it that, they really do, with having 300 different phone numbers where it calls on a round robin so that somebody picks it up and they're trying to remove themselves away from the deal. You've probably heard that from me a million times, is that the agents that are trying to remove themselves away from the deal as much as possible to create this passive business, I hope they get replaced. It just bothers me so much. Again, I give you examples all the time of agents that we get on a call with them, like, who's my point of contact? Oh, well, you can call any four of us, okay, because we all sort of pick up the slack on this. No. Who is the one person that is accountable to this? Who is the one person that is speaking to the client? Who is the one person speaking to the buyers? Oh, well, the buyers come in, and then if they're unrepresented, they go over here. If they are represented, then they go through here. They go through the quality. It's just, again, trying to make it a rules-based business. It doesn't work so well when there is emotion attached and there's logic or lack of logic that needs to be obviously expressed and needs to be educated and needs to be, molded, so to speak, to understand market value. It's just a hard thing to predict. So, but the things around the fringes of the real estate transaction, for example, title, that is a pretty straightforward process, a very straightforward process that I believe ultimately is a rules-based business. Escrow. Yes, there is a multitude of different circumstances, but each circumstances has a rule, and it's pretty simple. Attorneys in the transaction, everything along those lines, you could say that the negotiations of portions of the deal and whatever need to happen post it going into escrow or under contract, where it's renegotiations after inspection periods or inspection contingencies or wherever you are in parts of the country and what you call it. Yes, but that can be prompted by an AI in order to say, hey, this is a part that I can't go any further without this. Compliance. The transaction coordinators and everything along those lines, it's pretty rule-based business. I even see mortgage as a very rules-based business. And then same with appraisals as well. As much as you believe that they fluctuate, the only fluctuation that I'm seeing at the moment is whether it's a refinance, whether it's, a purchase, whether it's whatever it is, a home equity line of credit or anything along those lines. Those valuations tend to all have different meanings to them and change, and they seem like they're very variable. Have you ever seen an appraisal really not come in too close to what the purchase price is at the moment? Now, there are some discrepancies around the country, but that being said is that still not seeing them as much. But I think it's important I think it's important to understand that concept. I got really comfortable in the position of real estate and where we are from a transaction perspective because we're not in a rules-based business. Sure, there are fundamentals that people should listen to and should do, but at the end of the day, the variability is the emotion attached to that transaction. The variability is the greed that's attached to that transaction. The variability is the lack of understanding or, overanalyzing or the individuality of people. Whereas everything on the peripheral, though, could be a rules-based business, in my eyes. I'd love to hear your thoughts, but it was just something that I picked up and I thought it was a really good theory to understand what is ripe for disruption. And at the moment, being a realtor does make a great deal of sense to me. Your relationships makes a great deal of sense to me. And it gives me a lot of confidence that this industry won't be disrupted at its core, but it will, but it is all around it, apart from you and the relationships that ultimately you have. Anyway, hopefully that makes sense. Hopefully I haven't been talking around in circles, but it gave me a really good fundamental understanding of what AI can bring to the table. Thanks so much. So about 75% of our audience hasn't liked, followed, or subscribed to our podcast. It would mean the world to us, and it would help this podcast more than you know to expand our reach if you were to like, follow, or subscribe on any of the platforms that you're watching or listening on. Thanks again.